44. We did a segment on AI strategies in trading about 2 weeks ago, and it got a lot of really interesting feedback. We are not at all suggesting that there is this amazing pot of gold, a rainbow in the AI strategic world of trading. But it wouldn't be fair if we didn't present what's out there. Let's go to the first slide, Beth. So in part one, we discussed how AI technology has revolutionized the way we gather and interpret data. We have covered the first two AI trading strategies, algorithmic trading and machine learning-based predictions. We didn't say that they were good or that they worked or that everybody has to have them. We just said, hey, this is what's out there, so you know. So for today, we're going to discuss two other AI-based trading strategies that are being used in the world of finance. These are deep learning-based prediction and natural language processing. It's like a sentiment strategy. How do these strategies differ from each other, and how are they being used in the industry? Because this is stuff we don't do. We do.
That's true.
At Tasty, we do have our own machine learning technology that we wrote from scratch. Dr. Dad and his team put it together. We have an AI platform that we built in-house that we use to generate trade ideas, things like that. We
Would back testing be part of considered?
No, back testing is not really, no. But what we do is we try to just stick to Tasty mechanics and see how it all does, and we publish a lot of the trade ideas and things like that. I don't know if they're any better, any worse, whatever. I personally like I'm a brains over bots, and I don't believe that. I think AI gives you an educational advantage, meaning it gives you access to education really fast. I don't think it gives you any kind of trading edge whatsoever. But let's take a look. And people are going to say, well, it doesn't give you edge, but it eliminates mistakes.
It eliminates mechanical mistakes.
It can help to eliminate mechanical mistakes, but at the same time, it can also make you, it can put you in a position where you're not really, where you're not as cognizant of everything else that's going on around you. Markets are very efficient. They change very quickly. They can even move intraday, like a pair could be off, something like that. So there's lots of things that you have to take into consideration. But anyway, deep learning-based prediction. It employs AI sophisticated algorithms automatically to analyze vast amounts of complex historical market data and uncover intricate patterns and identify potential opportunities. Those are called predictions. This is kind of very classic. It's true. It's accelerating traditional fundamental analysis. This is an advanced machine learning-based strategy that has potentially revolutionized the way financial markets are navigated by potentially providing more accurate predictions compared to traditional machine learning models. Let's see a clear example and the limitations that it possesses. Next slide. This is where it gets a little heavy here, okay? But here's a clear example that our research team put together, just so you can see it. And
just a little something?
A little something. And you can see, we took it from historical market data, the raw prices, market price, trading volumes, economic indicators, other relevant data. This is the kind of stuff that Tony or I would say is irrelevant.
Sure.
This is the kind of stuff that our data scientists and our research team would say, well, there's some relevance to this. This is
maybe even more than some.
This is the kind of stuff where, sure, a bunch of our hosts, Ilya, Chris Vecchio, Victor Jones when he was here, all these guys would suggest that all these things, from economic indicators to other relevant data to, Pete Momat will say the same thing about futures and, futures information, market price, volumes, all that kind of stuff. In our world of quantitative finance, none of that stuff really exists. In this world, and for lots of other people in the very traditional world, it all still exists, which is really amazing. But anyway, we want to put this up here for you because our team put this together. It's really slick. So you can see the traditional machine learning, and then down below you can see kind of the deep learning. Let's go to the next slide. Now, this is a natural language processing sentiment strategy. So It evolves using techniques to analyze and interpret textual data, such as news articles, social media posts, financial reports, to determine the sentiment or emotional tone associated with the information. Now, I've studied this, I guess you'd say, in a very rudimentary and raw way, but we have employed and we have done deals with lots of companies to look at things like the impact of news articles, social media posts, financial reports, to interpret and to analyze this stuff. Again, I will argue there's very little there for me as a trader, but for other people, they live and die with this stuff. This strategy aims to gauge market sentiment and to make trading decisions or predictions based on sentiment analysis. Traders can use sentiment analysis to identify potential market opportunities, assess investor sentiment, and enhance their trading strategies. You know, like the problem for me is I'm a contrarian. So I look at investor sentiment when I believe it's grossly overbought or overstated. And what happens to me is, you know, I would fade it. This is a classic example today of if you faded investor sentiment, you got murdered the last 2 days. So I don't think it's easy at all. That's my 2 cents. Next slide. So what we did here is to give an example of the natural learning process and the sentiment strategy. So we posted it up here. This is just, I promise you, I know today's option drive is very heavy, but we have just a great team. So they have Twitter, they put StockTwits up here, they put Yahoo Finance as different data sources. Then they showed you the pre-processing and the sentiment analysis, and then of course the decision making, which is all based on just whether or not you want to go along with it or fade it. Which essentially is just the tasty mantra, which is we just provide this incredible amount of information and optimal mechanics so that you make your own decisions. There's no same thing here. It's a little different. I'm sorry. Same thing in that you make your own decision on which direction you want to take it. It's just a different source of information. I don't really care about sentiment. I care about just.
It's only as good as the source of the information, right?
And I care just about probabilities. Let's go to the next slide. So you guys can go through this on your own later if you want to, but we put the pros and cons of each strategy up here just so to take you through it. Like I said, this is a really in-depth piece of research it's exceptional. But I mean, for people that want to learn this stuff, we have so many tasty traders that are either work for big banks, big financial institutions, big brokerage firms, big analytical firms, or just, you know, they're in academia. And this is just really well done. We put the pros of each strategy, we put the cons of each strategy, and you can see we've kind of already discussed the pros a little bit, but on the cons, just on the sentiment strategy, it relies on the quality and relevance of the textual data. It challenges in interpreting, of course, and it may not capture all the dynamics and uncertainties. What I've never understood is if you're a true efficient market theorist, all that stuff is real. So yeah, this is super interesting information, but how are you supposed to trade off it in an efficient marketplace?
I don't have that answer.
I don't have an answer either.
Right.
I'm fascinated by it, but I don't have an answer. Next slide. So what we did here is that we gave you a general overview of all four that we've talked about. So the first day we talked about algorithmic trading and how it uses pre-programmed instructions to execute trading orders based on predefined rules and algorithms. There has been fascinating stuff. There are lots of trading bots out there. There is zero evidence that, in fact, if you asked AI, can you pre-program instructions to use certain set of mechanics to make money, they would say absolutely not, or it's never been done before. We have never been able to see the algorithmic trading other than in the market making side that would work for directional trading. But then there's the machine learning based predictions where you just base everything on market data to try to figure out, hey, what's next? This would be more of like you'd use charting patterns, or you'd use some kind of volume weighted averages or something to see, which way there's real-time money flow. Deep learning predictions, which use algorithms to identify and to just go through just enormous amount of market data. Again, I'm not sure how it all unwinds. That's the crazy part to it. I don't really get how you make money on it. And then the natural language processing center, which we just talked about.
Do you think it's more than a buzzword?
I think I've said this a million times.
I mean, come on, we've evolved.
I know. I think if there is inefficiencies in the marketplace, all of this stuff matters. I think when you're talking about, like, NVIDIA is a perfect example, okay?
So do you think it'll revolutionize housing pricing then, or sales of houses?
No, I think it'll revolutionize a lot of things in your house. So, for example, Tony Batista has a house that's 11 years old. I'm just making this up.
Yeah, sure.
You have a house that's 11 years old, and you want to know.
It's big, right? I got a big house.
You have a big house that's 11 years old.
Good.
Huge house. Biggest house on the block. It's 11 years old.
Never want the biggest house. Second biggest. Good.
You're going to be able to click on a button and see when your hot water heater is going to break. You're going to be able to click on a button and see when you're going to.
They do this with some cars already. Like
I understand they do, and it's going to get significantly better.
And you would say that was a scam. That they would say there's nothing wrong with it.
No, I'm not saying that's a scam. What I'm saying,
with your car, you would say,
no.
I'm saying I go in there, I need an oil change. They tell me I got to change this.
That's an inefficient model, and therefore the oil change is different. They're going to tell you when your air conditioning unit is most likely to break,
right?
Which is going to help you prepare for things like how to save money, for certain things, how to position yourself if there's a certain opportunity,
how to live without air conditioning,
whatever it is.
Sure.
But I believe that any marketplace that is inefficient is going to be disrupted by AI.
So is the housing market inefficient? Sales and buys of houses?
I think you're going to see that market get a lot tighter.
Okay.
But take NVIDIA, for example. Mm-hmm. NVIDIA is a $445 stock, right?
Yeah, up $7, yeah.
Up $7. Mm-hmm. If you were to buy 200 shares of NVIDIA, buy or sell it today,
you can do it within pennies.
You're going to do it. You're going to pay $2 on a $100,000 trade. Right. $2, literally $2.
Literally $2. You're saying the difference between bid and ask.
The difference between bid and ask is $2 on a $100,000 investment.
Right.
What is there to AI out of that? How's machine learning going to save? What's it going to save you?
What's the sense?
Yeah. There is basically, it trades for free. There's no commissions. There's nothing. It essentially it's a two-sided
pickle market.
It's a two-sided pool of liquidity that trades for free.
Yeah.
On the other hand, if you went to make a bet on whether or not, let's just say, Conor McGregor is going to win, or let's say Kansas City Chiefs are going to win the Super Bowl this year, and you plop down $100,000. You're basically going to put up 10 grand in juice. Mm-hmm. So a $100,000 NVIDIA bet is $2. A $100,000 Kansas City Chiefs bet is $10,000.
Right. Yeah. Right.
The $10,000 bet is going to be disrupted, just like the $5,000, the 5% commission on a house is going to be disrupted. But the $2 on NVIDIA, there's no room for disruption.
Right.
It's done.
There's no sense even to put the effort in. Sure.
I don't think there is. Mm-hmm. It doesn't make any sense. And how could the marketplace tell me if I'm buying NVIDIA at $447.50 or if I should sell it at $447.50? It's absolutely ridiculous. There's no way of knowing. So what we're talking about here is a much different and much more important strategic approach to all this stuff. Let's go to the next slide. Sorry about that. Let's go to the next slide. And these are takeaways. And I think these are super important. So deep learning-based prediction, which is also considered as advanced algorithmic trading, is the preferred strategy among other traders that use AI-based strategies. Okay, I'm not suggesting it's preferred among traders. It's preferred among traders that use AI strategies. This is because it uses an automatic, sophisticated algorithm instead of a controlled one to deal with vast and complex amounts of historical and real-time market data to predict potential market activity. So of the two we looked at today, that's the one that's used more often. However, and here's the key, however, it is important to note that predictions are not guarantees, and predictive AI technology is still being tested as a reliable measure of market direction. The jury is still out. At this point in time, in an efficient marketplace, I do not see the advantages of AI other than to keep you in some form of a traditional line, to keep you in line, to keep your optimal mechanics in line, and to help you on the education side of it. I just don't see where it comes into play. Now, in the rest of the world, it comes into play. Could it make Tasty more efficient? Can it make the content that we create on Tasty Live every single day and then push to our website more efficient and more important and more concise? And just
Easier to
100%
find?
yes.
Sure.
Is it going to impact, we're building new technology now where we think AI will have impact on the way that we deliver the content, but will you be able to predict trading markets? Like, does somebody with a lot of money have an advantage over somebody that doesn't have a lot of money in their ability to predict trades, next trade, which way the market's going? I'm going to argue no, not even close.
Very good, sir. Let's take a quick 90-second break and come back. That was a nice segment. Brought a good discussion, a different discussion than we normally have here at Tasty Live. Even the S&P's up 23, NASDAQ up 162. They continue to rally. We'll be back in 90 seconds. We got a market measure next.